Today we're talking about Activision. This stock is right now trading for $79 a share. Microsoft has said they're going to buy it for $95 a share, all right? So look at this up here in the calculator. 95 divided by 79 is 1.2 times. So in essence, that's a 20% return on your money right now if you bought it for $79 and they bought you out at $95. All right, so what's the catch? The catch is we don't know if this deal is going to go through at all, and if it does go through, we don't know when it's going to go through, all right? What's really interesting though, and the inspiration behind this video, is that Warren Buffett and Berkshire Hathaway own 9.5% of this. And if you look at this trend real quick, I'm going to do the last 6 months. They had a manager at Berkshire that bought, in this time frame here, I would say, around $60 to $70 a share. But then it was announced that Microsoft was going to buy it, and the stock immediately jumped up to like 82. Warren Buffett then, different from his manager that bought the other shares, started buying it. He said that 81 looked a little bit not too big enough of a spread for him, but he started buying it since then, and they own 9.5% of the company. He discussed it at their annual shareholders meeting, and I think that's a really interesting video. I'll link it. But just real quick, they own 9.5%, so 9.5% of this market cap, which if you look down here under the graph is $62 billion. So 62 times 0.095 is almost $6 billion Berkshire Hathaway has in this stock, okay? So in my mind, anything Warren Buffett's buying and he himself said he was buying is, worth a video all on its own, okay? So we're going to do a little exercise on our own and see if we think it's a good idea to buy it right now too at $79 a share. So here's a little decision tree, flow chart, whatever you want to call it. We're going to use it to do a statistical, probability-based analysis and just see if we think it's a good idea. That sounds way more complicated than it is. Basically, all we're going to do is just look at the probability of all these steps occurring and then come up with a fair value based on that. Super simple math. It's going to be easy, all right? So first off, these are the things that have to happen, right? Activision has to accept the offer. Microsoft has to have enough finances to cover the offer. Then the courts have to allow it because the courts can strike down buyouts mostly for monopoly reasons. We'll go over that. And then that's just going to be, other reasons that I don't cover and kind of also a margin of safety. Mainly just other reasons that aren't one of these up here. All right, so I got some news articles we're going to run through to get probabilities for all of these, okay? So let's get started. First off, Activision accepts. So this article is from Bloomberg, and I'm going to link all of these articles in the description. I'm just taking bits and pieces out of them. The only thing I'm taking from here is going to be right here. Where is it? Okay, more than 98% of Activision shares voted in favor of the acquisition, okay? So that's going to be a yes as far as Activision accepts, okay? So over here, I'm going to go back to my flow chart, and I'm just going to put 100% here for Activision accepts. All right, so next up is Microsoft's finances. Really all we're looking for here is do they have enough money to buy it? And, if they don't have enough money, what confidence level do we have that they're going to be able to secure the finances through debt to make this acquisition, okay? So to do that, I'm going to go to their own balance sheet, their 10Q, their most recent 10Q. So here I am on Microsoft's investor relations page, and I can see they filed their 10Q on April 26, 2022. I'm going to pull up the PDF version of that. Go to balance sheets. Oh man, this is easy. Look at that. Look how fast that is. So here's their assets. Here's cash and cash equivalents and short-term investments. So in essence, this is like their total cash equivalents, and short-term investments are $100 billion because this is in millions up here. So they have $100 billion in cash and short-term investments. That's easily going to be able to cover the purchase of Activision, okay? So I'm going to put 100% there too. Other companies sometimes have to finance their purchases, so there's some iffiness whether or not it's going to go through. One example is Elon with Twitter, I think. Like he's financing part of the acquisition, if I remember from reading. And look, this is an exercise you can do on that as well, okay? But here we go, 100% for their finances, all right? All right, awesome. Okay, so now let's go to courts allow. So we're back to this same article with the one that mentioned the 98% shares voted in favor, and this is what I wanted to talk about, okay? The deal will be reviewed by the Federal Trade Commission, which is led by Lina Khan, who has advocated for a more forceful approach to reviewing deals, particularly by the biggest tech companies. All right. So not looking too good, right? Under her leadership, the agency has blocked NVIDIA's acquisition of ARM, as well as Lockheed Martin's deal for Aerojet Rocketdyne Holdings. All right, she also resurrected the FTC's monopoly case against Meta, which seeks to split off WhatsApp and Instagram. Man, who is this person, right? What the hell? All right, so look, yeah, they say it again. Fears of the legal challenge are well-founded based on her statements opposing growth via acquisitions by big tech platforms. The good news is not everyone is worried, okay? So one analyst says he places the odds of a lawsuit at 10% and the chance of winning the case at 0%. Well, that's good. So really, he's saying it's got a 0% chance of getting shot down. All right, and his reasoning is that Microsoft wouldn't have a massive share in the market for console games or video games at large, and current antitrust laws overlook so-called freemium business models common in gaming. Okay. What is a little concerning too is that they say, like, even if they do the challenge, which that guy had at 10%, a legal fight that even the FTC won't win, Microsoft could still back out because they might not even want to do that deal, okay? So because of all this, we're going to say 90%. So I know he said 10% and then 0, which would be 100% chance of success. I'm going to say 90%, which I think is a little aggressive. I don't know, that's just my opinion. This is showing you how to do these exercises, right? So courts allow, let's say, 90% chance. Okay, but before we go to other, I just want to talk one more thing about the courts allow thing. If Microsoft goes through with this transaction, they're going to be the third largest video game company in the world, behind Tencent and Sony. I don't know who's won in that scenario, but it's behind Tencent and Sony. The thought that a U.S. department would block a U.S. company from getting bigger so that it could compete with foreign companies seems crazy. The government would surprise me with their own stupidity if they did that, which is hard to do because I have very, very low expectations for government intelligence, but that would be terrible. All right, so anyway, let's go to other. This is just like other factors, like stuff not covered here. I'm just going to put 95% because, there are other things that we didn't account for. I'm just going to try to account for them here, okay? All right, one last piece of the puzzle before we figure out a true value, and that's what's the share price going to be if this deal does not go through. One argument, and I'm going to pull the stock back up again, is that it would just fall back down to its previous level before the split, which would be, mid-60s. So let's take a margin of safety of, let's say, 15% from 66. So what's 15% of 66? Or 85 times 66. So let's say it fell to $56 a share, all right? So what I'm going to do is I'm going to go back to that flow chart, and over here I'm going to write that if it didn't go through, we'd fall to $56 a share. That might be pretty harsh too. It could probably just fall down to 60s, 70s, but we want to be conservative here. All right, so now's the fun part, the math. All right, so if you add all these up, and I say add them up, if you multiply all these, then this is how you would calculate the total probability of that scenario, okay? So you do 1 times 1 times 0.9 times 0.95. Okay, so then we'd say that this scenario down here has an 85.5% chance of occurring, right? So let me write that down here. And then this other scenario, the $56 a share scenario, has a probability 1 minus 85.5%. So that probability is 1 minus 0.855. And that's $14, not dollars, and that's 14%. Okay, so let me write that down. So now we got our two probabilities, we got our two numbers. How do we find fair value? So what we do is it's pretty easy. It's just a weighted average. So $95 times a probability of 0.855 plus $56 times a probability of 0.145. All right, and we get a share price of $89 a share. So this price here is like the statistical value of the stock a year from now, okay? Or I say a year from now because in one of the articles it mentioned, and we didn't see it, but the deal has till like July 2023 to be done. So it's most likely going to be done within the year, okay? So let's say 1 year from now, it's going to be statistically $89 a share. Not in reality. In reality, it's going to be probably 95 or fall back down to the, mid 50s, 60s, whatever it falls down to if the deal doesn't go through. All right, so the question is $89 a year from now worth paying $79 for right now? So if I divide this by 79, you'll see that it's actually a 13% return. So in reality, right now, if you agree with these assumptions, what you're doing is you're making a statistical investment that's going to get you 13%. Like I said, though, that's the statistical value. You're going to get either the 20% or, you're going to crash. So it's one or the other. But on average, if you played this game the right amount of times, if you played it an infinite amount of times and these assumptions were true, you would get a 13% return. So what's my take on it? I'm not really too excited by it. I think 13% is a little low. Y'all know my discount rate is 15%, which means that's what, I'd like to get. I know that's ambitious, but I'm not going to settle for something under that. But that being said, if I had a lot of cash that I didn't want to put in like other stocks, I think putting it here where you have like an 85% chance of getting a 20% return on your money would be a pretty good decision, okay? That's just how I think about it. I think just in general, learning to think about investments like this as probabilities, as potential returns, that thought process is going to really increase your gains in the long term. So anyway, I hope you learned something. Like and subscribe for more traditional valuations, and I'll see you next time.